know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, if you hear some pounding and other kinds of loud equipment, they're doing repairs here in the neighborhood, getting ready for the Christmas lights that go up and stuff, so I can't do anything about that. Sometimes they're annoying a little bit, but usually not. This is the crude oil. I'm going to save the space here in time to let Mike Moore talk to us about it. But if you remember, we've been waiting for a bottom to come in here. We made the lower low yesterday, and you notice we had this little limit minder in where we wanted to be alert to buy it down here, but we didn't get there. So last night, you can see real late last night, you came right down and made a little bit of a move. And then while everybody's sleeping, the market had this huge rally. Now, this was about 4 hours ago, so that would have taken us about a little before the stock market opened. That's when I sent the video out. Well, I sent the video out in the middle of the night, but there's what I said. Look to buy this 382 retracement because it was going to be pretty much spot on. Now, as you can see, anatomically, we're going to look at this because, I do one thing really well, and that's AB equals CD. So we've got a 60-minute chart. So what we're going to do now is we're going to go down to a 13-minute chart so we can see it really clearly. Now, there's what we're watching, okay? We're going to clean this out just like this. And here's what we were watching on the longer term. All you go to the smaller time frame, and you'll see there's your 382 coming in right here. Now, it stays here for half an hour, folks. Stays there for half an hour. Now, that is a really, really powerful move. It goes from 68.80 to 69.80, 70.30. That's $1,500. And your risk on that, buying it at 78, was right below here, which was only $200 and some dollars. That's a 7-to-1 risk-reward ratio, folks. That's tremendous. Now, as you see here, we've made some type of a big ABCD here, and I believe it's coming off of this bottom right here. And I'll do both just to show you because, yeah, there it is right there. After you've done so many of these, you can eyeball them to see that's what you're looking at. But there's several things when you're doing a chart like this, and you can't trade everything. If you get 3 or 4 good markets a day, good deal. Anyway, let's look here what we have. From the last high we made back here on Monday, okay, you came down here, you made the low there Monday night, all right, and look where the 1.618 expansion takes you up here. So you got 2 numbers up here to tell you that that's a pretty good spot. Now let's draw the other ABCD in just to see how close it was to the exact price. You go from there up to your high right here, you bring it down, and the price right there was right there, and we miss it by 45 cents. Oh, there would have been and we might get there yet. Ring that bell if that one comes in because you got ABCD plus 1.618. Well, that's what I do when I'm trading. I watch these little patterns. They're all over the place. They're boring as heck, and some people don't like to do them, but, all I know is you got 2 things going for you that very few people have is A, you know exactly where you're wrong, okay? And B is, if you miss this train, there's always a train right behind it. There's always some really good trades lining up. For instance, today in the gold market, let's take a quick look here in the gold. We'll get over here and take a quick look at it and see where we are here. All right, there was the gold this morning. You notice we had this nice run up right here. Here was the easy trade right here, folks. Let's clear this out because this was one we were watching real closely, always looking for ABCDs. And look at this nice one right here. Now that took 1, 2, 3. It took 4 hours to complete that ABCD. So if you're looking at it like this, it jumps right out at you, just like this one does, okay? Just like this one does. This one's even better because it took longer to make it to that level. And so that's why you'd want to be, sorry, folks, I got to get rid of that. Sorry for the noise, but the workmen, they they got to get this done. There's a big, holiday stuff coming up here in Tucson. There's your absolute, goes right to the exact low here, and then has a nice move up. And where does that nice move take you? Right up to the next ABCD off of that same move right there. And if you went short, that's $2,000 down. 1,000 up, $2,000 down. Pretty soon you're talking about serious money. Now, the good part about this is, if you're trading gold, the margin on the gold is $12,000 a contract. However, if you're trading on a smaller time frame, like a 13-minute, your margin is going to be 25% of that. So that's what you have to consider when you're trading, is how many dollars are you going to risk to see if you're going to be right, and how often are you going to be right, and how often are you going to be wrong, and what's your maximum drawdown. Okay, that's really what it's all about. That's what I try to teach all the time. Unfortunately, that guy in the back room there with the hammer is my wife, and she's banging me on the head when I don't do that. Well, she doesn't have to bang me on the head too much. I learned my lesson. Okay, that's the secret of the gold. Now, I've been asked to take a look at silver closely, so I'm going to get up here, and I still think silver's in a bear market, but it's coming down. One of these days, it's going to make a pretty good bottom. Okay, here's where we are. Aha, now this is coming up a little bit, Bear. This is a smaller time frame, but let's look at it for today. All right, now move it over a little bit, and we're going to see if we got anything here that would have helped us today. I haven't traded silver, traded gold, but have not traded silver. I don't trade silver that often, only because I made my first real fortune in silver, and I don't like to sell it short. I know that's crazy. Okay, here's the first run up. There's your first low here this morning. Okay, the market goes from 30.50 up there. It jumps $2,500, and here's where the game was played right here. There's your low. There's your 382 coming in right there, right between the two. Now look, you make another higher high. So what do you have to do? You have to recalculate the 382 again, and just to see, this was an easy one because of the fact that you had a little Gartley right here. This was a no-brainer right at the almost exact 618. You can see it right here as I move it over a little bit. I didn't do this because I was doing gold and I was doing a whole bunch of other things today. So there it is right there. Right there, bada bing, bada boom. And that should tell us that we should have got up to this level, what we already did. Let's see if it stayed above there. Move it over. Yep, there's your 1.618. That's that move from there to there to there. Now you have another move here. You see how long this move took to get to that level? Well, if you looked at this on just to see what the retracement level would be, you'd see what did it do? It came right down to the 618. Now, when that happens, okay, if I missed that, then maybe it made a 382 off of this bottom right here. Okay, so you go to take a look at that one and you put it up here. Holy moly, guacamole. Johnny, raise that 382 placard card, because there is a really nice move right there. One of the reasons why we did buy the gold. Sold it and bought it both times. So there's where we are. So we made another new low here, haven't we, folks? So what we have to do is we have to go back to the last major low, which was right back here, and we want to see if, in fact, that was the 382. And as you can see here, it was not. It went below that to the 50%. So you have to calculate the other one, which is right back here. And where does that one take you to? Almost exactly to the 382. I have a function here in Ensign that does all this for me if I wanted to do it, but I want to do them by hand. You can see the 50%, the 618. You can see the 382 right here.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we have a new trade working. I wanted to talk about it from yesterday. This is the March soybean meal. We were recommending buying this at $2.94. You can see that was the retracement right down in here. If we go down to the smaller time frame, because this is still active, I just wanted to show you why. There was a move we were looking for. It didn't quite make it, but look at the rally that it had early this morning. It equaled the last rally. You'll see that it went right to that level right here, just a little bit below it. Well, you can see it's between the 38 and 50%. Now, if you're only risking, and folks, we were risking $7 on this because we want to be a farmer is what we want to be. So there's a chance here. You shouldn't take any. If you're going to buy it for 4 or 3 and only make 4, that's not a good deal. You can break even if you have 2, but this is still a valid pattern. Now, I'm giving you my 2 cents worth. And of course, if you overpay, that's your own fault. This is an 8-minute chart. What we're going to do now is we're going to take this over and look at it on the daily chart, just like we were before. Okay, now here's where we are. You can see we had this many days up. Now we have days coming down. We're going to blow this up right here. And we're going to get as close to the exact number as we can possibly get, because I think we're going to get there eventually. So you put that mark right there, and there's the number we want to buy it at 293. Yesterday, the low was 293.60. Okay, we bought it at 293.80. That's had a nice run, but there's where you want to be looking to buy it again. Now, there's a chance it could go lower. Now, remember, this is March meal. But remember, we did our analysis on this a long time ago, like 3 weeks. We were looking at December. Now we're December 3rd, so December is into delivery. And so we're going to take a look. And this is when you're dealing with futures, you have to do these things. So here's December meal right here. And we're going to bring this up on an hourly. I'll bet you it's right around 282. Let's see where it is. See what the low was. Okay, here's December meal. This is the one that was up for delivery. And you remember it did. See, there's the end. We can see the trading has gone, basically dropped off. I'm going to get this in here, show you what happened. But there was the move here yesterday, right here. The December meal, the ABCD on this one right here, measured right down to where we were looking to buy it at 94. It went $2 below it. The March was even stronger. That's why we bought the March. So we're farmers. We're sticking with this bubby. And we get below here, 291, we're going to say sayonara. So basically, you're risking $250 to be a farmer. You don't have to worry about leasing the land, buying the soybean seed, getting the thing ready, going to the bank and begging for. You don't have to do that anymore. They love to deal with the farmers to go and get the money to pay all your stuff and stuff. Then you don't have to hedge your crop. All you do is you put your stop in, and you're going to be a farmer for however long you take it. Right here, if you'd have bought a low down in here, something like this move from there to there is well over $1,000, and you're only risking $200. Here again, you're looking at a 5-to-1 ratio. Now, what else are you looking at when you're doing a trade? You have to look at the margin. How much money of your capital are you putting in this to see whether you can make any money or not? The answer to that is, what is the margin? Well, the margin is $1,900, folks. Those are really good. Those are really good deals. They really are. Okay. All right. Now let's get on to one other thing that someone's asked us about. We're really getting ready to get in the cattle business, folks, because I think we've got a major sell signal coming up here in cattle. Oh, we have to do one other one that was fun. Hold on. Here's where we are. Oh, we're close. Oh my goodness, we might have made it. Please, no, we have not. Okay, this is February cattle, but we want to look at December because that's the one. That's June. Where's the December at? Let me get the December up here. This is important because we have different crops with cattle, just like they do in all the stuff. So we're going to put in the Z4. And we'll get this up here for a second. This is when you're trading commodities, folks. You got to know these things, and if you don't know them, you're at a disadvantage. If you know a chart, that's really great. Refresh maximum. No, it hasn't even begun to. I don't even think they're bringing. Yeah, there it is, right here. No, we want it to go a little bit higher. See, what we were looking for is one more higher high up in here. We might still get that. So let's look at the one they're trading, which is February. February's made a higher high. Hello, operator. I think this is the one we've been waiting for. Let's look and see. It is. Uh-oh. Got to put a trade on here. Let's get rid of the other ratios here. This is a double bottom, so it's not a true ABCD. We want this to be taken out. We've got to get the last of those buyers that are back here out of the way, and then that's what we want to be looking for. So all I'll be watching now in the next few days here is to see what the 1.27 expansion is going to be, because we're going to make a new high up into this area. That's what I want to see. I want to get that new high taken out, just like they did this one. See that? Right after that one, what'd they do? Boom, bang, down $1,000. So that's what we're waiting for. I would love to have seen this like this, but it didn't. Since we have the December, I took the December off already, so I'm not going to worry about that. Most of you people are not even concerned about cattle, but I am. And this is my show today, so I wanted to talk a little bit about that. So that's what we're watching here in the meal. Okay, now let's go back and take a look at that YM on that one we were looking at right here to see whether it got much above the 382. And as you can see here, we're looking at little bits backed off a little bit, 30, 40 pips, no big deal. Now, it's important, folks, because, we got the NASDAQ has made new highs today, and I believe the S&P has come pretty close. I didn't check it. I haven't heard the beeper go off, so I don't remember it. No, it's only got up to 62, 63. But as I said before, I think this is a really big day coming in here this week. Remember, the day was supposed to be December 2nd. Well, what's today? December 3rd, 4th, 5th. It's got to be down this week. If it's not down this week, then I'm totally wrong. Have to go back to that 200-day moving average with the candlesticks. Never did do well with that one, so maybe I won't go back to that one. All right, let's move on here. I don't want to do anything else with the crude oil because Mike Moore is coming on. He's going to go over remember how we were telling you to watch the heating oil and watch the gasoline, and he's going to be doing that for us at the break. So that's the real key. The other one that we had a nice winner on, we are now out of that, was the Treasury bonds. You remember we bought Treasury bonds on that pullback right there, okay? Because you couldn't buy it here because it gapped up. And that was an important gap because that was that 89W pattern where it leaves a gap like this. And that's, boom, the way it went. There was your second chance to buy it if you follow what we try to talk about. Remember, this took 2 days to make this 382. And look at that. And where did it go to? AB equals CD. Let's just draw that in. That's what Mark used to say with his little quirky little things. And it hasn't got there yet. But it hasn't got there yet. It made the smaller one, but not too much. That's the 1.618 off of this swing right here, folks. You multiply that times 1.618, takes you to right there. And that's why it had a little bit of trouble up in this area. Now, we've been up now, folks, 2 weeks, and all we've gone up is 4 points. Beginning to think doth protect too much. He's coming down here in the bond, so we'll see. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I wanted to show you the importance of the 382. You might think it's not as important as it is, but to me it's extremely important. This is the 382 of the early morning today. This is December 3rd. There was the high. There was a low that it made early in the morning right down here at 1137. Now, I had an order to buy that right there at that 1138. The reason why, it was a 382 pattern right there. There's also an extended ABCD at that point. But I wanted to walk through this because this told me that the market was not topping yet. We've still got another day or two. I don't know when it's going to be, but there's what had happened. Went right up to this level right here. And, of course, I got out a little too early, but that was telling me that this thing wants to go a little bit higher. So what we're going to do now, just for kicks and giggles, we're going to come up here and we're going to bring up this NASDAQ chart and see if we can figure it out together where we think it's going. So you're going to come over here, and, well, it doesn't make any difference. Hold on here a second. Here's where we are here with the NASDAQ. Okay, now there's the action that we had yesterday. Okay, I want to move this around a little bit to see where the 382 was. Okay, there's the 382. Okay, now if we know that that's the 382 right here, we've got an ABCD in format right here. We've already had another one here, so we want to see this one here because this is telling us. So we're going to clean this out just a little bit because this is new day's trading, and we're going to see how it's done. Okay, now there's your 382. There's your move. There's your pullback. So you're going to see the market come down. Remember now, the market is very bullish. You want to buy those retracements. There it is right there. And what do? We've got another one coming in up here just a little bit higher, right up about there at 2182. Now, you'll see as you're looking at this for the last 4 hours, what is forming here, if the analysis is correct, and a lot of times it's not, is going to be an exact 3 drive to a bottom pattern. This is right out of Gartley's book, page 249. Now clone that and you'll see you're looking at a beautiful parallel channel, and it should get us up here to 2482. Folks, that's only 50 handles. It can be there in a heartbeat. Look how quickly it made 80 handles right there. So it could easily get back here. What does this mean? This just means that this should be a topping area where it should pull down to a little bit later. In other words, come down and do that and keep your channel intact. However, if this channel is broken to the downside now, you've got 1, 2, 3 points. 1, 2, 3 points to look at. You start getting below 2200 again, or excuse me, 2190, it's telling you you're probably getting ready to make a top. Now remember, the Russell is lagging very badly, as is the Dow Jones. Let's see, is the Dow Jones still lagging? Yep, it's still lagging. Russell, I didn't even look. Here it is, right here. I was looking at it today because it had a huge break. There was the Russell. This is the 8-minute. You can see here this morning. There's where we were. Here's where we're coming down to. I didn't even look at anything. Let's just look at it on the hourly here. What we did here on this just recently when the Dow Jones went up and made its 382. Let's just check. Oh, I think it's 382 off of here. I can see so many of these that they eyeball right there. There it was right there. It's already made. It's already 6 handles. So anyway, let's take a look here at the Russell on a longer time frame to see what the 382 on the downside might be. Oh, look how much it's been here. Look at all these people that bought this here, folks, over the last 7-8 days. Every single one of them's got a loss. Every single one of them. That's not a good sign, is it? Hold on, we got a caller coming in maybe. Let's see what we got here. Hey, we got Mike Moore. Mike, kick me in the head, buddy. I'm running on about 4 cylinders today. We got Mike Moore of Moore Analytics. Please continue, Mike. I'm sorry, I doggone it. I had it written down and everything, and I blew it. So go ahead and start, my friend. Mike Moore,
That's
Moore
right.
Analytics. Start with the crude oil, heating oil, and gasoline, because we were talking about that. You told us the last time you were on we were going to make new lows, and we did yesterday. So what are you looking at now, my friend?
All right. You want to start off with the crude rate? Let me just see here. So I had it on natural gas. Give me a sec. So the crude oil has been in a lot of choppy consolidation right here. The direction for it just changed today. We have been bearish since, I'm not going to go over the higher time frame stuff, but just more recently, the trade back below, or on 1014, we left a minor bearish reversal above. We came off $6.86 from 73.18, and then we broke below 70.10. We'd seen 239. But today I said get long above 68.78. We broke above that right here. And then an additional long suggestion. I'm sorry, above 68.78. So we broke above that. So this is bullish now. It doesn't have necessarily a significant projection, but probably rally for a couple days. If this happens to roll over and take out 67.28 to 27, that's going to project this downward $3. Actually, that would be a minimum of $2 now, and as much as $3.80 plus. Any questions on that? Do you want me to jump to gas?
Let's go.
Would you rather do unleaded gas or natural gas?
I would like to do unleaded gas first, and then we'll do natural gas because that thing is getting its tail kicked in. So let's do natural gas, unleaded first.
Okay, so unleaded, I said the trade below 197.52, warned a pressure. We'd come off 7.93 cents, and a couple other bearish calls in here. That's changed direction today. I'd warned yesterday that today has a good likelihood of seeing range expansion. We've already rallied more than yesterday's range, including Globex overnight here. And we have broken above this formation right here, which I'd said to get long above right here at 193.43. And we've rallied up to 196.83 so far. That was a well-formed formation, so I expect that this is likely going to rally for days. And there's another, if you're not long already, there's another formation up here that comes in at 197.77, plus 2 per hour starting at 1 o'clock p.m. Decent break above there would warn of continued strength, and then we'll have another bullish formation up here above. And in the heating oil, we've been bearish in here, and I'm just doing the recent stuff. We've been bearish from much higher levels up in here, but I'm not going to get into all that. But the trade below 223.59 warned decent pressure. We saw 6.37 cents of pressure from there. But I did warn that we're likely in the last stretch of this structure down from here. So we've held there and broken above these lows, which suggests to me that this is now in a bullish correction against the move down from here, with areas of possible exhaustion at 223.77, 225.32.
Okay. So Mike, stay with us. We've got to pay a few bills. Mike, more analytics, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times the daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Back with Mike Moore of More Analytics. Please continue, my friend.
Larry, do you want me to go over the Brent and the gas oil, or you want me to jump straight to natural gas and then do the S&P and stuff?
Let's go to natural gas and then we'll do Brent, okay?
Okay. So natural gas has been coming off the past number of days. We've been bearish in here from, hang on one second. I've just been bearish in general in here. I didn't have a specific projection to the downside. Obviously, we've been bearish since $8.20.8, but we're rolling over here, likely in the last stretch of this move down. However, we've just failed below this line, which is bearish. We had a short suggestion below there, below 310.60. It doesn't have a projection to the downside, but it suggests it's going to at least come down here to test 298. And if it takes that out, we're likely going to head down to test 280. We take out this formation above right here, which is going to come in at 323.30 minus 2 per hour starting at 1 o'clock p.m. That is going to project this upward at least 200 ticks, maybe more. One other thing here. The maintained gap higher tomorrow would leave a minor bullish reversal below. And in the Brent, turned bullish today. We had been bearish from 10.14. You saw $6.80 to the downside. And then the trade below 71.39 brought in, decent trade below there will project this down with 370. I said get long on a decent penetration above 72.55. That was right in here. And we've rallied up to 73.86 so far. I expect we'll probably maybe rally for another day or so. And like I said, if we come off and take out this line below, which is going to come in at $71.52 or 71.53 plus 0.2 of a tick per hour starting at 1 o'clock p.m. That'll project this downward $3.70 plus. You want to take a look at the S&P?
Oh, yes. Everybody likes to see the old stop and pee, so please fire away.
Okay, so the S&P, I'm going to back out here from a real macro level, so there's going to be all kinds of lines on here when I back out. So I'm going from a 60-minute chart where each of these bars represent an hour's worth of price range to a daily chart. And I've been on the show long enough, Larry, with you that some of your older listeners or watchers will remember we called this as a macro exhaustion level down here. This was in 2022. We held that with the 3502 low, and we've bounced 2,566.25 points. A lot of other bullish calls in here I won't go over, but one of the ones we've been recently updating on this broadcast was the trade above 56.7850. I said projects us upward 240 minimum, 570 plus maximum. We've now gone on to attain 387.75 of that so far. That all being said, and then when we took out from here, I said it was likely going to be a macro correction / trend. Once we took out 45.2870, I said that this was in a trend, and we've been trending up since. Now, bear with me a second. I've lost some of my, not sure, but I'm not sure why. I've just lost some of my drawing tools on here. Give me a second here. Oh, there we go. All right. So right now we're up in this critical area between 60.5275 and 60.93 that are different levels of possible macro exhaustion. If we hold this exhaustion level and start a bearish correction, it should exceed 615 points to the downside. If we take this all out, we'll probably rally up to higher levels, maybe up to 62.23. All right, you want to jump to the gold?
Absolutely. Doing a great job, by the way.
Thank you, sir. I appreciate it. Gold just been chopping around here a little bit. The past couple of days, we just got bearish. I want to break down below this line. The trade below 26.6870. I said projects us downward 15 minimum, 111 plus maximum. We've already gotten the 15 minimum, but it just pulled back to the line, chopped around, pulled back a little bit. So I expect this still to roll over to the downside. If we were to take that line back out to the upside, which is going to come in at 26.8460 plus 3.5 per hour starting at 1:20 p.m., that would warn of renewed strength. This is not a very major formation. It's just sort of a minor formation. However, there is a significant formation below down here, which we're not really near right now, but you can see in the next couple of days, if it continues to roll over, that comes in at 25.7260 plus 1 per hour starting at 1:20 p.m. And a break below there would project this downward $166 an ounce minimum. And then finally, the Bitcoin. If you've been watching the show for a while, you'll know that I turned bullish when we held exhaustion below at 16,275 to 60. We've seen $84,040 per coin since then. Just recently right here, we fell back down through these highs, which I said to get short below, and we're rolling over here. Now we've just held this formation again. This is a pretty well-formed formation. That's going to come in at 94,757 as of 1 o'clock p.m. And it's going to increase by 26 per hour. And a decent break below there will project this downward 6,500 per coin minimum, 9,400 plus maximum. We break below there decently and back up through it decently, look for decent short covering and come in. Okay, that was pretty quick going through everything. Does anybody have any questions?
Yeah, we do have a question, and that is, I was doing some, trying multitask here. Someone asked a question if you could go over the natural gas again.
Sure. I just shut that. Give me a second. Okay, natural gas. On an overall basis, we've been bearish since the trade below $8.20, 0.8 a decent pressure. We've seen $6.68.6 of that so far. A number of other bearish calls in here. Those have been rolling from contract to contract. More recently, we got bearish here. We left a minor bearish reversal above on this day. We've been coming off the past couple days. And today we just broke below this formation here. That came in at 33.1060 minus 0.4 of a tick per hour. That now warrants of continued pressure that line is going to come in at.
Okay, we got to take a break. Mike, thanks for joining us, buddy. We'll have you on in a couple of weeks, okay, pal?
Sounds good, Larry.
Yeah, whenever you need to say something, let me know and we'll have you on special. No problem. We'll be right back, folks. Mike Moore, More Analytics, 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Oh, I haven't forgotten you yet, folks, but this is a prediction I made back on March the 5th, 2009. Thought we were going to have a rally, lasted better than anything since 1938. Well, the Dow went from 6,600 to 45,000. Sure missed that one. It did go up, but got another chance coming in, folks, because you see this pattern right here. This comes, there's that number we're looking at, November 27th, plus or minus 5 days. Well, this is the 6th day, and guess what? I don't know how you can do 5 days when you're talking about something that went on for 4.5 years, and you think you're going to get it 5 days out of 1,200 possible numbers. Shut the front door and raise the rent. You'll know when it happens, if it happens, and if it doesn't, it won't. So that's basically what we're watching here, but there's a lot of things tells you that it's happening. One is we got the volume decreasing, we got open interest decreasing. That isn't good, folks, because if you're selling cars, you want to have lots of buyers. You can see the buyers are leaving the market, right? So, by golly, what they going to do? They're going to have to rent cars, I guess. Anyway, that's what we're watching here today. Tomorrow, special day, of course, always. On Wednesday, we have Mr. Stan Harley as our guest, and he will be talking to us about the markets and what he's looking for. Finally, I wanted to show you something from Bert Noman of the Wellington Letter. You'll see here that he's looking for a break here. This is what they call an ascending wedge, and you can see dropping volume. That's usually not very good. Look at the bottom here in August. That's rising volume. Okay, you want to have that. This is not good. Buyers are leaving the market, folks. And as we've said many times, it's a 3-drive pattern. It's 1.618. It's all the things we love and like to play with, but sometimes they take the toys out of the sandbox and they make us pay a price. Well, maybe this will be one of those times that we have to stop working if it does. So live every day in an attitude of gratitude, and we'll see you on the flip side tomorrow, and may God bless.
Steve Rhodes started